is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm your host, Alex Tapscott, here with co-host Andrew Young, and we're back with repeat guest, fan favorite, co-founder of CMCC Crypto Capital, director at Prophecy DeFi, all-around swell guy. It's going to help us make sense of what's going on in the world today. Charlie Morris. Charlie, welcome back to the show.
Hi, guys. Good to be back.
So, Charlie, there's lots to talk about, but what's on everyone's mind right now is everything that's going on in the world, the whipsaw in the markets, trying to find a price level. What's the connection to, financial markets, fundamentals, and all this other stuff. What's your take on all this? Can you help us think through what yours and CMCC's view is on the markets right now?
Yeah. So, clearly right now, there's a lot of volatility. And to me, the way I look at it is that it's almost like there are two competing forces. One is the kind of the fundamental investor, and then the other is more kind of the trader or even the algo trader. And the fundamental investor, which is more where how I think is in these times of big uncertainty with kind of, currency risk and like kind of global risk, things like Bitcoin and crypto in general are exactly where you should be investing, because these are decentralized networks. These are things that kind of can withstand all types of kind of pressure, and long term, it makes so much sense that these kind of technologies need to exist and will be, how the future of kind of financial networks are running. So that's kind of the fundamental side. And so you see those fundamental investors with those views, really looking to be kind of buying at these kind of opportunities. But then on the flip side, you have these kind of traders and in particular, as I mentioned, like a lot of algos. And in the last 6 months or so, we've seen huge correlation between traditional equity markets and crypto. And in particular, you see generally that like crypto moves to at an extension, at a greater effect than the traditional markets. So with all this uncertainty right now, the traditional markets have been having a really tough time and falling down. And so a lot of these kind of algos and traders are thinking, well, surely crypto should be down, 4 times more. But then they're again meeting head to head with these fundamental investors. So it's really this dynamic, and my our view really is, sure, in the short term these traders are going to have an impact, but longer term, and our view really is going through the rest of the year, we think we're going to see a significant reversal with crypto really kind of the fundamental narrative playing out.
Yeah, it's sort of like that old Warren Buffett quote that in the short term markets are a voting machine, and in the long term they're a weighing machine. So if these recent events cause a short-term price correction, but actually strengthen the bull thesis, as you pointed out, then isn't it a buying opportunity overall? Not that we're not here to provide investment advice, but it seems like there's a disconnect between price and fundamentals.
Definitely, and and to get a little bit technical, so there are these kind of RSI indicators where we're at heavily overbought levels. Like the last time we were oversold.
Yeah.
The last time we were this low, it was like the COVID crash, and before, it's always been these really low. Dark moments where there's kind of the greed and fear index, and we're at maximum fear right now. And traditionally, buying at these times is a very, very good time to buy, and things tend to rebound quite nicely.
Yeah, I remember in March 2020 when everything was correlations were all going to one, like everything was completely connected, which is what happens in a liquidity crisis, which is basically what that was. And our favorite crypto assets were going no bid. You were salivating at the time and picking up when I think a lot of people were running for the hills, and that served you really well. Andrew, I know you've got some questions on this. Go for it.
Yeah, no, I think I was actually going to make the same comment about sort of correlations going to one. I'm kind of curious. One sort of thing that's been floating around on crypto Twitter is this idea that if Russia is sort of banned from SWIFT, which is like the international sort of payment system, there's going to be a lot of demand potentially for sort of Russia to use crypto to evade sanctions.
Well, they'll be looking to other stuff, right? I mean, is that one of the options, I guess?
So yeah, no. So I guess what I'm trying to say though is that necessarily a good thing or a bad thing, given that, I mean, I guess in one sense it's sort of more demand for crypto, but it's not really the type of demand I don't think people, at least people like me, were kind of hoping for. And then at the same time, you're also seeing sort of crypto being used to fund Ukraine defense. You're seeing people raise money for that sort of cause. I guess long-term, what do you see this impacting crypto?
Yeah, so I think basically there is this notion that there could be like a politicizing of this technology. Like you say, you know, if it's clear that all Russians are moving to Bitcoin, then does the US react by, you know, having really, really strong regulation against Bitcoin? And I think, you know, my hope very much is that as technologies themselves are neither political nor moral. They are, you know, amoral. They're purely technologies. My hope is that we don't come to a point where large nations are putting regulation in place as a reaction against other political regimes. And my view, actually, honestly, is more from kind of the freedom aspect that the people will kind of turn to crypto in a positive sense, rather than kind of in this kind of negative, kind of dark market sense. Alex, do you have a view on that?
Yeah, we talked about this actually on the last episode, and I think we actually use similar words that you just used, which is that it's an open source permissionless technology, and it can be used by people you agree with and people you disagree with, and that doesn't make it good or bad. It just is what it is. And if anything, to your point, this kind of technology, because it's decentralized and censorship resistant, makes it easier for people who are oppressed to have a voice. Now, I wouldn't want to equate people who are suffering under the threat of invasion in Russia with, you know, truckers in Canada, but the concept is somewhat similar in the sense that this is a means to, you know, pay for things when current financial resources don't exist, right? And I think that's something that people who are trying to make this a partisan issue, trying to make it political, ought to be reminded of from time to time. There are at least as many examples, if not more examples, probably of things that they agree with, where crypto is playing a positive role, than the things that they don't agree with. You know, if a criminal uses email to plan a bank heist, it doesn't make email bad, right? It means the criminals are wrongdoers. There's a big difference.
Yeah, completely agree.
Yeah. So switching gears a little bit, we may circle back to the markets in a second, but you just got back from a huge event, ETHDenver, and improbably Denver has become like a mecca for developers, or at least this event, I should say, because I don't think year round it's, you know, a huge hotspot. But ETHDenver, other than the sun and the clear skies and the mountains, you know, is not typically known as a big tech hub, and yet we've had this thing ETHDenver. But ETHDenver seems like a bit of a misnomer, or it's a bit antiquated, because it's not just ETH people, right, who go there. What was that event like?
Yeah, so an amazing event. You know, I think the way I describe it is kind of exciting, vibrant, and chaotic, which in my mind is kind of like personifies the entire crypto industry. So maybe just a few kind of background, you know, details on the event. So, you know, this was a huge event. So they sold 15,000 tickets, and they reckon that about 12,000 people attended. So, you know, it was a big event. And, you know, there were, you know, some challenges, honestly, with that size. You know, there were, you know, some of the venues had pretty long queues, you know, but at the same time, kind of out of that chaos came some pretty interesting moments. You know, I think, you know, for me on the personal side, like when I got there, and the first thing I had to do was do a COVID test to be able to get into the venues. And I queued for like an hour and a half. And in this queue behind me was this like dad and his two sons. And I started chatting to them. And very quickly it became clear to me that like these, you know, these two kind of young boys were like, or you know, probably like late teenagers, like maybe 20-year-olds, were like really, really smart, like really, really clued up. And, you know, and we started talking. I said, so, you know, how are you involved in the space? And they said, oh, like, have you heard of the Twitter account croissant.eth, which actually, funnily enough, I was already following. And it's this, you know, it's a great Twitter account that does like lots of in-depth analysis around Ethereum and kind of what's going on. And I said, oh yeah, like, you know, I know this, I follow it. And they were like, well, that's us. And it kind of struck me for a number of reasons. Like one, these guys were very young and I was just actually super impressed with like how much they knew. Secondly, they'd never been to an Ethereum event before. So these guys providing great analysis online were like entirely remote. And thirdly, just the kind of like the anonymous or like semi-anonymous kind of angle was something I saw crop up quite a few times during the conference, which I think is kind of like a general trend now. You know, there was a panel even where like a CryptoPunk was speaking and the real person wasn't even there. It was just his voice. And so, you know, that's, you know, just kind of a bit of a side story. The other thing I kind of point I would make is that this was an interesting kind of hybrid of both a conference and a hackathon, which again brings like this big kind of healthy mixture of developers with kind of investors and all sorts of people. So, you know, unlike something like Solana's Breakpoint, which was very much a conference, or like ETH Waterloo, which is very much just a hackathon, this had a bit of both. So again, it just kind of adds to the chaos. And then maybe actually just adds just to your point, you know, you said, you know, this is EthDenver, but actually to me, it was kind of EthDenver, but Ethereum only really in name. There was such a huge variety of projects there. You know, just, you know, for example, like, you know, the Cosmos community was there in force. You know, you had people from the Cosmos Hub and from Osmosis and Region Network, and then, you know, you had like Algorand and Near had pretty big presences with their own kind of areas and things. So you know, I think that's just interesting to see that people see this conference really as a crypto conference, not just Ethereum. But then also in part, I feel like a lot of these other communities almost kind of feel like the legitimate place to go, you know, is an Ethereum themed conference. And that Ethereum still has this big kind of sense of gravity pulling everything else towards it.
Yeah, I totally agree. And one of the things I saw a lot sort of on Twitter, everyone was mentioning about how, man, not another DAO tooling startup, or like some comments like around that. I was just kind of curious, what were some of the trends or projects that seemed the most exciting?
Yeah, so like I'd say definitely the buzzword was DAOs. There were like tons of DAOs. There was a DAO I'd never heard of who threw a party and like Deadmau5 was DJing. And like, you know, there were, yeah, and again, I think, there was some kind of huge parties sponsored by DAOs. I think, you know, a few obvious things, and I spoke to a lot of people about on the DAO side. I think there's a very clear sense that, you know, this potentially is a big year for DAOs. You know, I personally believe that at some point this year, like a DAO will probably buy a sports team, like a major league sports team. At the same time, I think there's a lot of agreement that like DAO tooling is not very good yet. There are still all sorts of issues around governance. There's like one in particular that I really
Charlie, just for the sake of the audience, DAO, like I think people know about DAOs. We've done some episodes. When you say DAO tooling, like what are you referring to exactly?
So if you are a member of a DAO, for example, you know, so maybe you have a few hundred people or a few thousand people in the DAO, it's very difficult to actually coordinate. So the DAO is this collection of people, and all of a sudden, you know, someone puts up a proposal and says, hey, you know, as a DAO, we should buy a CryptoPunk or buy a sports team. Firstly, everyone in the DAO needs to somehow be notified of that. There's no like default notification for everyone on a DAO. And then there has to be some kind of method of communicating as a DAO. And most people are using Discord, but, you know, that's not, you know, that there's no like default way of communicating. And then there's a voting mechanism that needs to come into play. And then even once that's happened, you know, you then need people to actually probably use some multi-sig so that's kind of a multi-signature wallet to move funds or to actually act on the decision that's been made. And for all of those pieces in the governance process, there's just a lack of like tooling, a lack of like software to use, no like clear default ways to do it. And so that's really what people are talking about when they're talking about tooling.
So interesting, because like DAOs are this new way to organize people around a common cause, to have a common wallet, to spend money, to build stuff, right? Like it's not, the comparisons to a company are, I think, justified, a corporation. And, you know, we have 150 years of corporation tooling that's been sort of developed, I guess, if you want to use the same word, and quite highly honed. And now we're trying to reimagine these new structures, and we're kind of building the airplane on the way down, right off the cliff. Not that we're in for a crash, but it feels like a bit of a leap of faith, right, with a lot of these things.
Yeah, for sure. And I think, one of the most interesting projects actually I spoke to there was, so I don't know if you guys are familiar with Gnosis and the Gnosis DAO. And so Martin Koppelman is the kind of founder, and he's a super OG, very, very smart. And Gnosis as a DAO has been building a lot of this tooling. So like they have like Gnosis Safe, which is now one of the main multi-sig wallets that a lot of DAOs themselves use. And then they've recently created like Cow DAO, so which is like Cow Swap is this exchange that they've created, which is almost like a DeFi OTC desk. And they had their own stage, which was like the build stage, where there was a lot of discussion around DAOs and what was going on. So that was interesting. Maybe just to kind of move on to some of the other kind of big themes, I felt like there were quite a few wallet providers there. And definitely, and this, I guess, goes a little bit in hand with the tooling aspect, but wallets, amazingly, are still not that good in the crypto space. And it's so obvious that should be like the number one tool that everyone needs and should be really, really good. And so, there were a bunch of wallets there trying to clearly like onboard new participants and get people into the ecosystem. There's one in particular called Balance, which is made by a guy called Richard Burton, who previously was on the team of Rainbow Wallet. And Balance is like a very kind of community-driven, fully open source. That was kind of interesting to see. And then maybe kind of finally, also tying into the DAOs, but so out of the blue, Andrew Yang showed up. And I guess people may know of him, but he is a kind of a pretty prominent pro-crypto kind of politician now in the US. And I think he's launching
candidate in the last election.
Right, exactly.
Yeah.
So he turned up and like he was absolutely mobbed. And everyone was like very thrilled. And I think he turned up without telling anyone. And then literally like within 10 minutes, the organizers just like put him on stage and were like, speak. So he's creating like Lobby DAO, again, a way to bring people into the ecosystem. But then interestingly, outside of him, I met, another guy who was going to run for Congress in California. And obviously, Ryan Selkis was there, who's going to be, staging his own campaign at some point. And so it seems to me that like definitely crypto is going to become an issue for politicians going forward, which to me is a really bullish thing, again, a bit longer term for the ecosystem, that if people are running on pro-crypto kind of policies and you have enough of these people doing it, I think in the next, 5 to 10 years, we could see some really like, pro-crypto legislation kind of come into play.
Yeah, no, and we actually talked about this last in our last episode as well, because we had Ryan on the podcast. It was the last episode of the year. And he is obviously very passionate about sort of crypto policy and the SEC more specifically. And one of the things we talked about was we think that the crypto people tend to be incredibly passionate about cryptocurrencies. And what I mean by that is there's this idea that a lot of crypto people are single issue voters, as in they don't even necessarily believe in left or right, typical divide. They are either you're either pro crypto or you're anti crypto. And what's interesting is I think it's like 45% of millennials now own crypto. And a big percentage of those people are incredibly passionate about crypto because crypto is kind of like a political movement. And so we started to see this a little bit over the last year where the crypto movement itself is a very potent political force, able to sort of, whether it was with the infrastructure bill, delay the passage of it by a couple of days. And so we've been sort of flagging this as a trend, which is it's going to be a big issue if you're a politician and you're anti-crypto, because you have this incredibly passionate, essentially special interest group, where it's pretty much the only thing they care about. And I guess not to diverge too much, but one of the things we talked about a lot in our last episode was sort of the situation with the trucker convoy and the protests in Canada. Just kind of curious, what's your quick take on the situation that happened there?
Yeah, generally the kind of the protest kind of aside, I fully understand that the reason for the protest, but the scary thing definitely has been around the freezing of bank accounts for people, funding and using crypto. Honestly, I do find that a bit terrifying. And I hope that that kind of thing isn't going to happen again. There's a good friend of mine as well here recently has had his bank account, not frozen, but told that he has 30 days to basically get off his bank account, and no reason given at all. But he's a pretty heavy crypto user, and he thinks that's probably why that happened. And yeah, I mean, I think honestly a bit scary. I think you guys as full Canadian citizens maybe have a better sense than I do as a relative newcomer here. But I mean, like I say, I hope that's not something that becomes normal practice.
Yeah, thanks for punting it back to us. We covered it a lot on the last episode. Yeah, I mean, was the Emergencies Act justified to end the blockades? Maybe not. But at any point, was it necessary to freeze bank accounts, or should it even be lawful for them to freeze bank accounts without due process, without a warrant, without any civil liabilities for the bank? Like, it's hard to find any justification for that. And the spillover into our industry has been quite concerning, right? Because this is an industry that's still nascent, that still holds a lot of potential to create lots of wealth and new jobs in this country. And it sends a pretty strong signal to people in the industry that the government would take such a heavy-handed approach without really considering all of the details. We talked a little bit on the last episode about how they kind of were treating non-custodial wallets in the same way that they would treat a centralized financial institution like a bank, even though they're so fundamentally different. It's like asking Prada, we said the Gap last time, but I realized I don't make wallets. Prada is my wallet to, basically hand over financial information about people, how they're spending their money because you happen to buy their wallet there a couple of years ago. So it's not justified, I don't think, at all. So Charlie, some sort of predictions for 2022. We're a couple of months in here, but every month is like a year in this industry. You are on the record being bullish on the merge, which is this event that's going to occur in the Ethereum, the move from proof of work to proof of stake, and how that could unlock lots of value in Ethereum, and with a spillover effect that would have to other ecosystems and assets. What's your take on that? Are you still bullish? Like, did anything come out of EthDenver that gives you more clarity on that? Actually, that's a better way of phrasing it.
So I'll start by saying it's yes, still very bullish about that event. And to give you kind of a few numbers, so on a daily basis right now, about $30 million US dollars of ETH is created and basically provided to miners who are giving their processing power to the network. And of the miners that I speak to, about 80% of the ETH they earn, they're selling to pay for their operations. Now, when the merge happens, that $30 million created a day reduces to about $5 million. And the entities getting that $5 million are these validators who are not miners. They have significantly lower kind of running costs, because being a validator is all about security and not about having big kind of processing power and electricity bills. And so really, what I see happening, or we certainly see, is effectively a supply shock. So when the merge happens, you suddenly have significantly less ETH daily going to the market and being sold. And so as long as demand kind of remains where it is or increases, then we think there's going to be a significant re-rating of the price of ETH. So that to us seems like a pretty simple calculation. I spoke to a number of core developers at EthDenver. It definitely seems to me like things are on track. And I believe that the plan is probably kind of mid this year for the merge to take place. And Of course, Ethereum has a bit of a track record of delaying things, but I'm feeling, relatively, confident after those conversations that, it will be happening at some point, probably mid this year. So yeah, and I think interestingly, when that happens, I see a re-rating of the price of ETH, but I think that will probably drag a lot of other kind of adjacent assets up with it. And for a couple of reasons. So in a lot of DeFi, a lot of kind of DeFi assets are very correlated to the price of ETH, particularly if they are, paired against ETH in a lot of these kind of DeFi trading pools. So if the price of ETH goes up, generally, unless that ratio is going to change, those assets are also going to kind of pull up as well. And then I also think just how markets work, probably a lot of kind of other L1s and Ethereum competitors will benefit from the re-rating of the price of ETH.
Yeah, it's interesting. Just to play devil's advocate, if Ethereum becomes more useful, doesn't that mean that on balance, other L1s should suffer? I think one of the reasons L1s have thrived in the last year and a half is because Ethereum became a victim of its own success and gas fees went really high. But let's say that the merge occurs and all of a sudden those issues start to become less severe. Doesn't that, I understand the thesis on Ethereum, but other than the correlation of all these assets, I'm wondering how that benefits other L1s.
I think in the long run, I agree with you that, yeah, if Ethereum becomes incredibly cheap and usable and fast, then yes. However, I think I'd be careful about thinking that the merge at one point in time is suddenly going to alleviate all of the UX issues that Ethereum has. And in particular, we still have all of these different kind of L2 chains running on top of Ethereum. And one thing we've been really interested in at CMCC is bridging technology, which is still very nascent. And so actually, even if you're using Ethereum L2s, which are very cheap, if you want to move between, Arbitrum and Polygon and, Optimism and whatever else, that process is still not that slick. And so I think Ethereum still has a way to go, even post-merge, to bring that user experience to the point where it's kind of seamless for an end user. And in that time period, I think you still have a lot of opportunity for other L1s, things like, Solana, to really kind of prove that they have at this point, kind of a slicker user experience and an easy way to use. But then also longer term as well, I still believe that there'll be space for many different L1s to exist, probably with just a slightly different focus. And maybe it is, for something like Solana, it's really high throughput DeFi on an L1, and maybe less, something else, NFTs or something. Whereas maybe you'll have something like Kusama, which is very much, this kind of almost like a test net for Polkadot, which has somehow kind of managed to pull together a lot of creatives and has tons of really arty kind of wacky experiments going. So I just think each chain will have kind of its own identity and will attract different builders.
Yeah, I totally agree with that as well. I think one thing I actually wanted to touch on, because I know we sort of talked about Terra Luna a little bit. There's been some questions over the last couple of weeks with sort of the sustainability of Anchor protocol, which is sort of the main, I guess, DeFi and lending protocol on top of Terra. I'm just kind of curious if you have any thoughts on sort of the sustainability of Terra. I know they just did a big raise as well to help sort of backstop liquidity. Do you have any sort of insight into that or any comments?
Yeah. I mean, so we were seed investors back in early 2018, and obviously it's done incredibly well, particularly in the last kind of 6 months or so. And I think I guess one of my big things is the Terra team is pretty unique and unlike a lot of other teams in that they are hell-bent on just making Terra work. They call themselves the lunatics, and really, they are absolute maniacs in the way that they think and live and breathe this space. And so, Do Kwon is kind of this figurehead. And if there's anyone I would kind of believe can build something to some, really monumental nation state level size, I think it's him and that community. So yeah, but I do, I understand the concerns, and obviously, it's basically, it's an algorithmic stablecoin, and pretty much all other algorithmic stablecoins have failed and dropped the peg, but UST hasn't. And so, and it's, I think, it's one of these things where the longer something has existed for, the more likely it is to exist into the future. And despite, a lot of kind of FUD happening around that ecosystem, the peg's been held. With Anchor itself, the reason that there's been kind of doubts around it is it's still providing, I think it's like 19.4% returns on UST on stablecoins. And that is better than pretty much any other stablecoin DeFi platform out there. And so as a result, we've had huge demand flooding in to basically provide UST. And given the kind of the downward pull of the markets, there's not been enough lending on the other side. So it's basically lots of people putting in the capital to lend, but not enough borrowers. And so, which is why kind of the foundation had to step in and kind of backstop it and add additional liquidity. So yeah, in general, yes, I remain very kind of positive and confident with that team. And I think what they're doing is very, very interesting. And this $1 billion raise is, it's very significant. They had some massive investors taking part in that. Yeah.
Well, what's interesting is that the raise itself was actually, they sold $1 billion worth of Luna tokens from Treasury. So the investors, who are supporting it are, very exposed, or like because of the investment directly exposed to the token. So obviously they not only have faith in some corporation or whatever, it's the actual protocol level asset, which I thought was quite interesting how they did that. And also, you mentioned about DAOs buying sports teams. I think Terra Luna just sponsored the Nats, the Washington Nationals, which is like totally flew under the radar, which is kind of hilarious because aren't they a DAO? Like, isn't that basically what that is? We're halfway there.
Yeah, exactly. And I think a lot of people, I've had this comment, I heard it recently where someone's like, oh, everyone's talking about DAOs, but they're not really here yet. But that's where I completely disagree. Like DAOs are already here in a big way. You've got the Cosmos Hub, multi-billion-dollar DAO. You've got, as you say, basically, Terra and Luna is also a massive DAO. You have things like BitDAO that's managing billions of dollars. Now, the one criticism you could level against a lot of these is that there are a few really big whales who are generally like the founders who have a significant amount of control, but that doesn't stop them from being DAOs. Anyone can put forward a proposal, anyone can vote. And over time, I imagine these things will become more distributed in terms of kind of token holdings, and then governance will become more distributed. And yeah, it's just, mark my words here, it's a matter of time until someone like the Green Bay Packers just goes full DAO.
Yeah,
I guess for Wisconsin,
they're kind of already a DAO, right? Because I think Green Bay is owned by a bunch of shareholders. But
if they're a DAO, then every company's a DAO for that's got a joint stock sort of company that owns something. Well, it's so interesting. Like you talk about a criticism as that they're big holders. Well, that's true also for a lot of public companies. In fact, it's even worse. There's dual classes of shares where insiders are all but guaranteed control over the company in perpetuity. Whereas, to my knowledge, very interesting idea is a dual class governance structure for a DAO. I don't know if that exists. I'm not aware of that. But at least my understanding is all DAOs, it's like pari passu, every token has got the same kind of rights and power and economic interest.
Yeah, and I think that, and the big problem with that is that a lot of the smaller holders are just not really incentivized to vote because they realize that their vote is kind of meaningless. And I think what we'll see pretty soon is the ability to basically delegate your voting power to different people. And so you'll end up with, potentially community members who themselves are not that influential, but they manage to build enough support from the community to get delegated a lot of voting power. And then you'll end up with some senior governance council that'll really make decisions.
Yeah.
Yeah. I think voting, one of the biggest issues with DAOs, in my opinion, is just the fact that we don't really know how to govern them yet. And there's because the people voting are pseudo-anonymous, there's no sort of traditional legal liability or things like that, fiduciary duty to sort of prevent people from sort of imposing a tyranny of the majority. And so, it's something I'm sort of trying to work on with my own project with sort of creating betting-based governance systems, which are obviously a little bit newer, but yeah, I don't know. Alex, do you have any other questions?
Well, I mean, I think we could keep going on this. You know, the issue of governance and DAOs, like Andrew, you've worked on this. It was in your recent report that's going to be featured in the new book, Digital Asset Revolution, where you talked about futurarchy. Oh, and by the way, just to a quick plug for the book, Digital Asset Revolution, let me just tell you a little bit of what some folks had to say. Tyler Winklevoss, this is an important book for enterprise leaders to better understand blockchain and how digital assets will change business forever. Perry-Ann Boring, to grasp the fundamentals and intricacies of the most revolutionary financial innovations of our time, there's no better guide than Digital Asset Revolution. As insightful as and instructive for those looking to understand the future of personal finance, personal and global finance, as it is for those investing in it. And even our good friend, Sandeep Nailwal, Digital Asset Revolution demonstrates the tremendous potential of Web3 and digital assets by describing their roles in powering this new era of technology innovation and economic progress. Wow, some pretty kind words for our work, Andrew. I think you should be very proud. That'll be available this spring. Maybe we don't want to say too much about your chapter in that book to keep the people guessing and make sure that the book sales come rolling in. So maybe that is a good time to end it. Charlie, it's been a great discussion as always. Thank you for joining us and helping us make sense of all this. Just one question. The kids in line at EthDenver, did they get a term sheet from you by the time you got to the front or no?
Do you know what? No, but they've created their own DAO called the Bakery. So it's croissant.eth and pastry.eth are the two brothers, and they have the bakery, which I think is probably well worth checking out. I think you need to buy an NFT to gain access to the bakery, and I think I'm going to do it. So yeah,
I'm going to go.
Yeah. Okay.
Life-saving.
I get some. I just want a lifetime supply of croissants. Is that one of the benefits of being a token holder?
Maybe if you become part of the DAO, you could put up a governance proposal for that.
All right, sounds good. See, DAOs are the future of the world. If I can get croissants for life, then we know it must be true. All right, thanks, Charlie. Thanks, Andrew. Great chat. Take it easy, everyone. See you next time.
Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.